Next session, I'm Rachel McIntosh. So, as we know, VCs play an integral role in the FinTech Center. However, for those who are new to the space or those who are on the outside looking in, the nuts and bolts of the role of VCs in the space might be a little bit unclear. And that's why I'm so pleased to introduce our next guest, Arif Al Alawi, who is the Chief Executive of Dubai Cultivate. Mr. Al Alawi is here to give us a glimpse into the mindset and mechanics of investment in fintech. In particular, which key indicators investors prioritize when looking at startups and SMEs, how firms can create productive relationships with VCs along the way of their growth journey. And I'll just add that Dubai Cultivate has allocated $100 million for investments in the technology sector, including fintech and blockchain firms. So let's welcome him to the stage. Thank you.
Shall we start? Good morning. Maybe a lot of you already know me from yesterday. I'm representing Dubai Cultivate. I'm the CEO, and today we are talking about like the role of the venture capital. And I think a lot of you are in this field, in this business, so we will not go through the definitions. And I have this presentation. I'll go through it quickly, and I'll leave the session for the questioning. If you have more questions, we can be more than happy to answer for it. So this is the fintech industry. A lot of definitions we've seen. Every company they have their own definitions, even in the Google. So basically, what we define it is the fintech is a technology, talking about the financial and technology, for using the technology in easing the transactions and the processes of the financial institutions. Basically, this is a very a broad definition, because financial institutions, they have transactions and they have processes. So you need to basically put them all under digitized. And some examples of the fintech types: we have crowdfunding. Some of them already are in Dubai, we have invested in Beehive, and there's Eureka also, and some other international companies are there. Mobile banking, most of the banks in the world, they are using mobile banking. Robo-advisory, I'm sure there are a couple of companies here already in the exhibition. And one of them is Wahed Invest. Yes, they are the first Sharia-compliant ETFs. They have developed their own platform, crypto, currency and blockchain, Bitcoin, Ripple, Ethereum Classic, and then we have insurance companies. They have used a lot of these, and mobile payments. Now we see a lot of mobile payments being introduced in the region here. If you talk about the pie in the Gulf, the majority goes to you can say the UAE is taking the lead. We have a lot of fintech incubations and accelerators. One of them, for example, is Dubai in Fintech Hive in the IFC. Go for the next. So what are the key, we can say, when you're looking at startups, we as VCs, what we look into these companies when we are before investing, what we look into the parameters, basically. These are the major parameters, or basically indicators, that we see in any VC. So it doesn't have to be all of them, because there are some VCs in different stages. Some VCs, they are backed by already financial institutions, backed by big families, backed by they have their own multinationals that are taking them to the next stage. So some of them we don't take all of these indicators, but most of these startups we look into these parameters, and I think most of the VCs today, they look into these. And a lot of companies now, through experience last 10 years, whenever we have an an ideation, or basically somebody who's an entrepreneur is bringing his product, he is ready and his data room is ready. So it's the cycle is changing now. A lot of people they have gone through train their minds that what is needed by these VCs. So the process of like onboarding or investing to these companies is becoming much shorter now. For us, it takes us like between 6 to 8 weeks if everything is like in place, the data room is ready, the team is there, then 6 to 8 weeks usually takes us to invest and decide on a company. For the we're talking from the other side, as entrepreneurs, what they are looking into, how they can attract these VCs to invest into them. So there's a process before, like going to the pitch day for the to provide the investors. They have to do their homework. Basically, they need to know what they need from these VCs. Is it the financials? Is it the money? Is it the like networking? Is it somebody to sit on the board and take them to the next level? Is it the business plan? Is it finance? So they need to see what they need from these VCs. They have to do their homework and then see what are these like VCs that they are in this line of business, what is their track record, and then finally they select the right partner for them. And then on the day of the pitch, basically they have to be prepared. They have all the business model, financials, and assumptions is ready to be answered. And on the day of the doing the pitch, we as venture capitalists, we need to see what are the short-term milestones, and what is is this company part of our strategy that we need to, is it scalable, this company, we can expand this, is this company more like light assets, focusing on, for example, is it cloud-based, can we take this company overseas? So these are some of these parameters that we look into before going ahead. And then for these VCs or for the startups, they need to create more relationships for the future rounds, next rounds when they are going for the Series A and B. This is an example of what we have done so far in our fund as Dubai Cultivate. We have, when we categorize the startups or the investments, there are different stages in the VC. There's the early stage, which is the ideation, and startups really that they are just initial stage, which companies did not generate any revenue. So for us, this is the first stage. We don't touch them. Second stage, which is the growth stage, venture capital. This is where our fund is focusing on. And this is the uniqueness of our fund, that it's only 3 to 5 years. We are taking companies already generated revenue. They have a clear strategy for expansion, but they need sort of a help for us to be there to take them to the next stage. And there is the latest stage, venture capital, which is basically the early stage of the private equity, which we are not touching at the moment. So this is our current pie that we have structured our existing fund, existing liquidity, and we say that let's focus on different subsectors of the technology. So the main, today we have invested in the Fintech. It's basically taking 40% of our investment today. We invested in Beehive and Wahid Invest almost a year and 18 months ago. And then we have the Real Tech, which is Delos. It's an American company. So basically, we are not investing in local companies only. Our fund is well diversified. Geographic, we don't look into the geography because technology today has no geography. We look into companies that are scalable. You can take them overseas, and starting from Dubai, expanding into the GCC and overseas, or taking a company from overseas that they have a target to expand into overseas, to come in the Gulf, and to put their part of their operations, we invest into them. So it's both sides. We invested also in logistics companies called Fuddle. It's the first last mile delivery. It's a platform supporting all the last mile companies. That this is a light investment, which is it's a platform only connecting to all the other platforms of the last mile delivery. This company is in the logistics, or basically the legal tech is called Case Engine or Code Engine. Also, it has another name. This is one of the first legal techs that they take the companies into automation of legal documentation of these legal departments or legal firms. So this company is doing very well. Like we are expanding now into Abu Dhabi and now into Saudi Arabia. The last company we invested in is into the AI tech. Is Akakos. I'm sure a lot of you know about RTA and Dubai taxis. Most of them, they have inside the IoT chips, and they have cameras inside. They're using our system. This company has now more than 24,000 cars linked to their system. And now we are expanding into Sharjah and Ras Al Khaimah, now expanding to Abu Dhabi, and then next stage to Saudi and Egypt. 3 out of these companies are already in Saudi Arabia: Beehive, Wahid, and Fuddle. So now we're working on these other 2 to expand them. So we are helping these companies to take them to the next stage. The good about, we are being there because we are not a normal VC. We're backed, sort of backed by government. Our name is Dubai Cultivate. Dubai is the name of as a country. A lot of people, they believe that Dubai has done a lot progress in all different sectors, and now in the technology sector, and people believe that they put the plan and then they execute. And that's why when we developed our relationships in Saudi Arabia, now we're working with a couple of VCs there to basically co-invest and take these companies into the next stage. And already we have done in Beehive, in Wahid, and now we're working on Case Engine and Fuddle. The next subsectors we are focusing on is the medical tech, edutech, industrial, and blockchain. So far, we have studied a couple of blockchain companies from overseas, like South Korea, from Canada. So far, we did not we didn't find a full-fledged, already existing with a proven record of companies into the blockchain. But we are studying now 2 companies, one in edutech, or 3 companies in edutech, and we have 1 company, medical tech. So this is basically our portfolio that we have selected all the subsectors in the technology, and the uniqueness about our fund is the technology as a base, and then we are taking the subsectors as all other industries. And then we expand, we go and help these companies for the second and third rounds. This is our due diligence process. Most of the companies, they have, I think, almost the same, but the process that we have basically designed, why we are faster than others. In the initial stage, when you're screening these companies, we have our list. We have developed our own internal screening. So we filter these companies initially. We take the technology as the base. Is it technology this technology is new, is scalable, is it expandable, is it using the latest art of technology? And then once it passes the first stage, so we have a list of, for example, in this year, more than 65 companies filtered. Now we have selected for the second quarter around 7 companies, which they are basically are qualified to go for the next stage. So we have 5 areas of due diligence. We do the technological and financial and commercial. We do it internally. And then after the committee, they accept the product, the projects. We then present it to our board. If they accept it, then we go for next stage, which is Sharia. We are Sharia compliant, and we do the legal due diligence. Sometimes we employ third party to do for the technological and financial if these companies, they have overseas branches. Otherwise, we do it, most of these companies, they have existence here. Their headquarters are in Dubai. Once the board approves the project, we go for the second or almost the last stage for the due diligence, the legal and in the Sharia. If it's approved, then basically we start like finalizing our share purchase agreement and basically transferring the cash into the company. What we are providing to this, why we are different from others. We provide a lot of help into these companies. We are hands-on, so when we start, basically, after we sign with these entrepreneurs or the companies, we start like employing our plan. So whenever we see a company, there is a potential for us, we negotiate even on the price, and we tell them that this is the value that we are giving. It's not only the cash. We study the we do all the financial, we redo all the business plans. We tell them that what we can take, where we can take the company to, and where are the first markets that we can access to. And basically these are the main areas of like what we think that when they link their name to our name, that we're basically up positioning these companies, even sometimes the startup, but the other investors, when they see us, we're investing in this company, they're coming in because they take us as their due diligence stage. These are the main, we can say, why they're selecting us. We were done with I've tried to make very short, so if you have questions, we can do it more question and answers. Okay.
Thank you very much, sir. Thank you for your presentation. In relation to the question, we have a business and wanted to see how you can actually able to help us to grow in relation to do you provide the service of if we want to expand, for example, in other countries of GCC, do you conduct all the research in relation to that? Do you conduct the people that we're going to be dealing with, or do you have a set of networking that you can provide as an asset for us as an organisation? So these are the things that I want to sort of get a little bit more details, how you can able to help us as a business to expand, especially through the GCC specifically.
Yeah. So initially when we started this, I'm coming from a private equity and venture capital for the past 7 years. I've been working in this field. So I've been exposed to most of the high net worth, financial institutions, family businesses in the GCC. So we covered all. And we and my team, we're working on basically re-establish these relationships, and we have done some MOUs between us and other VCs in the Gulf. So the connection we developed already is there. So this is the first stage we have done. That connection is very important, because once you want to do like a research, we don't want to go like a field research. We have our partners there, like whoever is like interested to come into this company. So we have like different VCs there, family businesses, they have an interest. We take there basically also the due diligence from their side, but also we do our own due diligence. Like we hire a third party to do the commercial due diligence in that market, and that's why we are handshaking with these all VCs in the GCC. So we share all the expenses for the due diligence, the company, and we basically reduce the cost on acquiring these companies. So the answer is yes. We do our own research and due diligence on these like new markets, and we recommend you that this is the right market now to get in, or the other markets, because in In some areas, like for example, for the last mile delivery, we have our existence in Dubai, UAE, and Saudi Arabia. But we outsource and we use the agency in Kuwait, Bahrain, and Oman. Because we think these markets, yeah, there are, I mean, the growth is not as we think in these major markets. We have to be existent in these. In Egypt, we will have a branch there also. So we are thinking to have like a different strategies in accessing each market through distribution, agency, or our existence to have a branch. Yeah. Yep. Yes. Yeah.
Hi, thank you for the presentation. My question relates to the type of finance that you offer. I can see that typically from your structure you provide traditional equity finance with a shareholding, a seat on the board. Obviously a lot of markets, especially in blockchain, are now moving towards tokenization and such, and I just wonder what your thoughts are on that, and do you get involved in that?
Well, see, while we are investing in some of these companies, I'll show you, yes. Financing, I mean, we are in business of equity. For the financing side, we have our partners, which is Mohammed Rashid Fan and Dubai SME, supporting the local companies only. But now we have like a third party like supporting also these, if you need the financing into these companies, we have now Beehive is as a peer-to-peer financing. So if you need financing for your company for a short term, like up to 18 to 24 months, Beehive has a very good experience into this field. So for the past 3 years, we can say in total transactions, they have done more than maybe 700 million dirhams, comparing to like if you bring in like 3 to 4 banks, I think they are doing much better than 3 or 4 banks because of the strategy they have taken in, the way they onboard these companies. Like you have initially your product is there, you present it, you put it on the platform, and there are these people, they value your risk of this product and then categorize it A or B or C, and then there is a profit rate of, say, for example, between 7 to 11%. The highest risk is between 11 to 12%. The minute they put that on the platform, they open for the smaller investors. Like these investments, usually they need between $500,000 to 1 million to 2 million dirhams. So you allow smaller investors with like 10,000, 5,000 dirhams to come in. So basically, they bring in all these small investors under one, and they fund these companies, and they've done quite well in UAE and Saudi Arabia. And the good thing is that we, through our partners in Dubai SME, they've created a fund to support the local companies also to back the financing side, to reduce the risk on even the financer, the third party. So it's sort of a capital guaranteed for them. And the operation expedited for these financing companies. We did as well in Saudi Arabia through our partners, Riyadh Capital. They have created a fund there through Social Development Bank and GIB with 110 million Saudi riyals to support the local companies. These are still we are talking about the local companies, but still they are adding a lot of value, which helps also companies like Beehive and Eureka from the other side. Eureka is a crowdfunding, but they are into equity. So you have companies now like an alternative to banking, because in banking the problem is that they require a lot of collaterals, they need a backup. So if you are a startup, most of these, can say 80% of these startups or people have ideas, they die. Because these banks, they require a lot of like backups, personal backups or basically third party. So I think the idea of example of crowdfunding is supporting this business to grow much faster, especially the startups. Now we see more startups than like 2-3 years ago. And they helped a lot. And still, we think that they need to ease the processes to give like a different types of financing, because some of these startups, they don't need the initial capital. They need for the process, for the transactions, for like discounting bills, factoring. So they have already introduced these things. Yes. Okay. Okay.
Thanks for your presentation, sir. I'm looking at your future editions, and I see a very small portion in blockchain. I mean, blockchain is such a wide-use technology that could cover any fintech, real tech, logistics, and medtech, whatever.
Yeah.
How do you have a less belief in blockchain, or is it you're more into traditional tech?
No, the current exposure is based on the existing capital, which is $90 million in the fund. So basically, we want it to be in all different sectors, and what is available today, the more ready we have seen this in these sectors. In the future, this fund will expand. We are now promoting the fund to other investors to come in, like other family businesses from overseas, could be like VCs or fund of funds they want interested to come in. So once we have the 100 million, then it will be like the proportion will be much higher. Today we're putting only 1 million because we believe there's a potential, but we didn't see a lot of like blockchain companies ready today we invest in. Even we started among the first, maybe in 2019, we had 2-3 companies from Canada. We did not see that they are ready. They have the concept is there. We want to see the full cycle of like onboarding, and then we want to see the full transaction. We want to see the revenue. They failed to show us these transactions. All of these companies we invested in, they are even in the break-even or above break-even. Case Engine is above break-even. They are profitable now. In all the portfolio now, we're doing quite good. I mean, even during the pandemic, we are up by 20%. For the past, I can say, 18 months. But we believe in blockchain, yes. Blockchain is like, it's as a future for, I think, all the systems, all the fintech or even logistics, they have to turn into the blockchain, because it will be the backbone for all the transactions. It's a more the secure transactions, we can say. Yeah. Yes. Okay. Thank you very much.